Dear viewers, the Indian stock markets are dealing with two realities that are highly conflicting. First, the huge influx of money. The number of demat accounts, first-time investors, retail participation, and inflows through SIPs have witnessed sharp rise. So much so that the impact of FII volatility has been subdued. Financialization of savings is in full momentum, giving legs to the rally. And then there is another reality that the markets are frothy. Sensex PE at 24 may not raise eyebrows yet, but small caps, microcaps, and SMEs are a different story. The BSE SME IPO index alone has grown over 50% CAGR in last 10 years. Most of these gains have come in the post-COVID market rally. I am wary of this space. The key concerns are limited disclosures and lot sizes that make it too late and too illiquid to exit in case the business does not turn out as expected. But for many cases of gains disappearing in thin air, there are some cases where SME stocks have proved that they belong to a different league. Some of the SME stocks over time have migrated to main board, addressing these concerns that I mentioned before. So while there could be many potential Verenium Cloud-like companies, there could be a few Gensol-like candidates too that have multiplied returns over time. For investors with high risk appetite, reduction in lot size is also a welcome event which exchanges come up with every 6 months. As such, it wouldn't be a bad idea to track SME stocks. So where do you start building a watch list for potential multibaggers in this space which is inherently risky? I believe tracking insider action is a good point. As I've shared before, this is a metric that I track for small cap companies. Over last few months, I have noticed some SME companies figuring in this list. And for this discussion, I'm focusing on companies where the prices at which insiders have bought recently is close to the current price. The first is Vilas Transcore Limited with market cap of rupees 10 billion. The company manufactures and supplies power distribution and transmission components mainly to transformer and other power equipment manufacturers. It has two manufacturing facilities in Gujarat with capacity of 12,000 tons per annum. It is adding another 24,000 tons capacity this year. As such, the capacity is increasing 3 times. Its clients include Voltemp Transformers Limited, Electrotherm India, Atlas Transformers, Shilcha Technologies, etc. With the investments in the power and transmission sector, the company's products are likely to be in demand. Its revenue in FY24 stood at rupees 3 billion with operating profit margin at 11%. The company is net debt-free. The return on capital employed stands at 22%. The stock is trading at 43 times earnings. The latest insider buying has happened in August at a price of rupees 425, and as I record this, the stock is trading lower than that price at rupees 392. The next is SKP Bearings Limited with a market cap of rupees 4 billion. The company makes and supplies precision rolling elements. The sectors it caters to include auto, textile, bearings, pharma, electronics, aerospace, etc. In Feb this year, the company acquired a French entity with expertise in precision rolling and ball production that marks its foray in Europe and will help it expand its global footprint. It will also allow the company to offer an enhanced range of products from different materials such as stainless steel, brass, aluminum, and glass. Potential user industries for these products include automotive, aerospace, medical devices, industrial machinery, and consumer electronics sectors worldwide. Its revenue for FY24 stands at rupees 5 billion with EBITDA margin of 34% and net profit margin of 21%. The return on capital is 16% and debt to equity is 0.5 times. The PE stands at 35 times. In September this year, the insiders have bought shares from the open market at an average price of rupees 219, investing almost rupees 2 crores. As I record this, the current stock price is rupees 235. The third is Harshdeep Hortico. The company makes and supplies planters for indoor and outdoor use. Besides, it sells accessories like garden hose pipe and water can. Recently, it has entered into the field of roto-molded outdoor furniture. It markets its products to around 27 states and union territories in India. Major portion of the revenue comes from Maharashtra. It has two manufacturing facilities and 3 stores in Delhi, Pune, and Andhra Pradesh, along with distributor and online sales channel. The company has a debt-free balance sheet. On a revenue base of rupees 480 million in FY24, its EBITDA margin and net profit margin stand at 22 and 14% respectively. The return on capital employed is 25%. The business is working capital intensive, which is a risk that needs to be monitored along with growth prospects. The stock's PE stands at 17 times. It has witnessed regular insider buying, latest in September at a price of rupees 71 per share, which is close to the current stock price. Now do note that no view is implied on any of the stocks in this video. The SME space is inherently risky and needs due diligence. That said, I believe these are some of the names to track in SME space. Some of these may migrate to main board, thus addressing liquidity concerns over time. With this, I have come to the end of the video. Share your feedback and press a like button if you found the content useful. Subscribe to Equitymaster YouTube channel for more such content. Thank you for watching. Goodbye.